Good afternoon, everybody, and welcome to the Golden Nugget that happens every single Wednesday at 12:30 Eastern Standard Time on the Verified Investing channel. Obviously, I'm Drew Wolfer, verified pro trader at verifiedinvesting.com. I am your golden guide to everything that's happening in the precious metals markets. So, as you probably know, and if you're here for the first time, welcome. But if you do already know, we're going to dive right into what is happening inside of the gold markets. We're going to do some technical analysis on gold first. We're going to do some technical analysis on silver next. We're going to talk about the trades we were talking about last week, how they played out. Then we're also going to get into the economic data that has come out over the past week that has driven the precious metals markets. We're going to talk about the movers and shakers that have shaped this market and could be potentially shaping this market into the next week before you see me again next week, right? And secondarily, we will get into all of the economic data that is going to be coming out this week and next week. So without further ado, let's just get into the analysis on gold. Now, the first thing I'm seeing on gold, we were talking about this last week. I said if we come up and we reject from this downtrend, because we were in a micro downtrend, remember that. This is from the all-time high to the next peak to the next peak, and it was very well respected. But the more you bang on a resistance level, the more likely it is to break above said level, okay? Now, we were getting caught up at this point of control, and this was what I was talking about last week. We had to get above this point of control, and whenever you get above a point of control, this is an FRVP, and I gave a tutorial on this, on how to pull this and how to trade this last week. When you get and break out above a point of control, what you do is you target the value area high for a long trade. Now, the one thing that did develop after we had talked about it was this ascending triangle with a breakout that took you all the way up to that value area high. So if you had taken that trade, you would have had about a 6x risk to reward on this if you had set your stop loss just outside of the low on this, okay? Now, secondarily, what we're looking at moving forward is if you come back down here and you retest this 33.26 level, that is where you can start to enter long positions either here at just under the 33.50 level, or secondarily here where this ascending triangle is, okay? So I'm going to zoom in so that you can see this just a little bit better. But this is your long position, okay? This would be where you would be taking some pretty decent swing long positions and targeting, at the very least, the value area high. Now, if we take out the value area high, because we have broken market structure to the upside now, and I'm going to take all this stuff off so you can see exactly what I'm talking about on breaking market structure to the upside. But as you can see, we have a nice uptrend, okay? And as long as you stay above about this $3,325 to $3,330 to $3,340 level, you are going to continue in this uptrend. And we'll give you the economic basis and the market movers that could make that happen. But the first resistance is going to be right here, because we had our, high, our lower high, another lower high, and then we finally came and got a higher low and a higher high. So now we're breaking market structure to the upside. So we should see gold starting to pump. So anywhere in this range right around here is a pretty good indication of a potential long trade, okay? And again, remember, this ascending triangle has a top, and now, which is now a support level, used to be resistance that we broke through, okay, at about 33.25. So this is kind of your longing range, and you're going to be looking to come up here and take out these highs at about $3,400, just shy of $3,450. That is what we're seeing inside of the gold markets. As it sits right now, that would be your trade. If you break below this level and you get below the point of control and this pivot point that is now support here, this is where you start going to enter short positions. Now, let's get into the silver snapshot, because the trade that we were talking about last week played out perfectly, okay? We had an upward sloping trend channel, all right? Then we took our Fibonacci from the previous all-time high to the swing low after that all-time high, all right? The ultimate low. And we got a 1.618 Fibonacci extension retrace that gave us a price target of potentially $37.78 on silver. Now, we bounced off of the bottom end of this trend channel perfectly. We saw the breakout actually it was this week, from this bull flag, and now it is about halfway to our target. So this is in massive profit right now. And as you can see, it has now taken out the midpoint of the upward sloping trend channel, and it's potentially using it as support right now. So even if you haven't got in, you can wait for a pullback to, the midpoint of this channel and get in here. Now, obviously, this is the best place to enter, is on the breakout. This is where we confirmed, and then the retest of this bull flag, and then bang, we take it all the way up to about $37 to $38, right? Now, the one thing that we need to do is we need to take out this previous high that's over here, okay, which is at about $34.86. We have not quite got there. We got within 10 cents of it. We need to take out $34.86 to remain bullish. Now, if you break below this little pivot point right here, and I'll even give you a better pivot point, this would be bearish, okay? This would be bearish for silver, okay? Because now you are above this pivot point from these two highs, okay? So you'd like to stay above this, but at the very least, you need to stay above this pivot point right here, okay? You need to stay above this pivot point right here. So anything above $33.43 is going to be bullish on silver. Now, I want to get into the segment called the Commodity Compass, and I have everything in notes so that way I can be cognizant and respectful of people's time, but I want to talk about everything that's happening in the gold market. So as we all know, gold is actually steadying above that $3,350 level, which is a key support level. And this is amid the US-China trade tensions and the labor market statistics and the coming jobs data that's, coming up that we'll talk about at the end of this video, where we talk about all of the different, economic data that's going to be coming out over the next week, at least until I see you next week on Wednesday. So we have recent escalations in the US-China trade rhetoric where Trump said they basically broke the deal. This is specifically going to be potential new tariffs, and there are stalled negotiations now. So that's obviously going to reignite investor sentiment into safe haven assets like gold, okay? Then gold prices have actually received a boost on safe haven demand, and this is following a slowdown in jobs data, okay? So we in the US just reported that we only had about 37,000 jobs when we thought that there was going to be 114,000 jobs, according to the data from ADP, whenever we reported earlier this week. Yeah, that's not something that's looking like a super healthy economy. So you're going to see a boost in gold, and that's why you see that big candle that we saw just, a little while ago in gold, okay? So big green candle came right after that news came out. And investors are obviously going to be closely watching this upcoming jobs data that we'll talk about at the end of the video. So pay attention for that. But I want to get into the knowledge bank, okay? And this is something that I call the golden rule, okay? And this is understanding gold's role as a safe haven asset. This is something that I can't go super highly in depth in like a 15 to 17 minute video on this channel, but it's something that I teach inside of the Golden Opportunity, which is the gold training program where we teach you, or at least I teach you, how to trade gold, that's coming out on June 23rd on Investor Day on Verified Investing's platform. So pay attention for that, and I promise you everything you need to know about fundamental analysis on gold and what drives the gold market and how I have an 83% win rate, it's all inside of that training. Now, with markets, navigating potential trade conflicts, you've got your volatile macro data, right? And economic data and your political risks, all right? Gold's going to, this is going to play a pivotal role in the way that gold actually moves whenever this type of data comes out. So correlations between gold and the US dollar, the DXY, they have an inverse relationship, okay? So when the DXY is going up, gold goes down, okay? Because the dollar's strengthening. So people are like, okay, I will keep my money in the dollar. But when the dollar goes down, gold goes up because people get scared and they say, look, I want to be in something that is actually going to hold the value, right? And appreciate potentially in value, earn me a yield, because nobody just wants to hold money. They want to earn yield. So I want to emphasize the importance of understanding the economic data that we're going to be talking about at the end of this video. All of this economic data plays a critical role, because when there's geopolitical risks, right? When there's trade tensions like we have right now, when there's wars happening, okay? When there's crises like oil crises and things of that sort, a lot of times investors pile into gold. And then whenever risk on assets like the equities markets or even cryptocurrency are pumping up, a lot of times you will see gold capitulating or going down because people are way less, they don't want to be in safe haven assets because they feel like they can make more money in outside markets, okay? So there are very specific reports and data that come out on whether it's weekly, monthly, quarterly basis that I cover inside of the Golden Opportunity, things like central bank decisions, central bank policies, interest rates, all of your wars and tensions and things of that sort, and how to handle those and navigate those. And I cover that inside of the Golden Opportunity. So let's get into the fifth segment, which is going to be our special report called the Market Movers. So I've got all of this written down, so I want to smash through it so that everybody, I want to be cognizant of people's time. Gold's divergence, okay, from industrial metals right now is kind of concerning, but we're going to talk about why that could be happening, all right? So gold has risen over 40% this year, but if you look at the industrial metals, copper, aluminum, right, they're all on the decline, which is wild. And secondarily, gold is now at almost a 100x per ounce price as silver, which is also an industrial metal, but known to be a precious metal too, okay? So about a year ago, maybe a little bit more than a year ago, gold was actually less than 70x the price of an ounce of silver. And historically speaking, it's usually about 40, okay? So you're seeing gold diverge in price away from not only the industrial metals that are utilized every single day, right? But also silver, which is a safe haven asset, a precious metal, and an industrial metal. They use this in everything, like even nuclear warheads, right? They use them in your phones, your electronics, all of this, right? So you would think if gold's going up, then in a healthy economy, silver, aluminum, copper, all of those would be going up too. But that's almost suggesting that due to central banks buying gold in troves, which we're going to talk about in the next segment, and investors being extremely risk averse right now, right? They don't want to take risks right now, okay? That gold is going to continue pumping into the future. There's two likely scenarios, right? There's either going to be an upcoming correction in the equities market and gold is going to continue upward, or there's a bubble in gold, right? And historically speaking, there's never really been a bubble in gold, so it could be possible, but I think it's less likely. Now, I want to get into one more special report before we talk about the economic data that's coming up, okay? This is going to be the central bank watch. This is integral, and this is something that I teach inside of the Golden Opportunity too, that you absolutely have to pay attention to if you're going to be trading gold. So Poland was the biggest buyer in April, okay? They added 12 tons of gold to their reserve. And at 509 tons, the National Bank of Poland now holds more gold than the ECB, the European Central Bank. That is wild. So the National Bank of Poland has now increased its gold holdings by 61 tons since literally the beginning of the year. In 2025. That is central bank buying at its finest, okay? The Czech National Bank, Czech Republic, has been adding gold at a steady pace over the last few years, and it bought 3 tons, which is, about 1/3, 1/4 of what Poland bought in April as well. And the People's Bank of China reported an increase on its official holdings. And remember, China is a part of the BRICS nations, something that we talk about in the Golden Opportunity as well. And this is for the 6th straight month, adding 2 tons to its, reported holdings. We don't know what it added to its non-reported holdings, though. Then that's kind of pushed the official gold holdings to 2,294 tons, about 6.5% of its reserves, okay? Now, I want to talk about what is going to happen this week and before you see me again next week for the Golden Nugget, okay? So on Wednesday, which is today, we have ADP non-farm payroll, non-farm employment change, okay? We have the Bank of Canada interest rate decision. That's something you need to pay attention to. And then we have ICM services PMI, right? Okay. Thursday, which is tomorrow, the ECB decides on interest rates. Again, we're getting into some critical times here. Then we have the US weekly jobless claims. That is going to be key too. So watch for some gold moves happening. If jobless claims come in hot, gold's going to pump, okay? Because it's going to signify that the economy isn't doing so well, right? So if jobless claims come in more than what we thought, it's not going to be good. Okay, and that's going to be good for gold, but not for the economy. Then we have on Friday, U.S. non-farm payrolls, baby. So that's the U.S. jobs report, essentially. So this is going to tell you, it's going to give you critical insight into, how recent tariffs are affecting our labor market. Okay, and again, if this comes in less than expectations, right? If we have less jobs, that's not a healthy economy. People are going to flock into gold. Okay, then you have your average hourly earnings, which I don't pay as much attention to. U.S. unemployment rate. That's going to be big. More unemployment, unhealthy economy, right? Pump in gold. Then you have the Reserve of Bank of India, their monetary policy decision. Okay. And again, remember, India, BRICS nation, big mover and shaker in this market. And then on Monday, we have a bank holiday where there might be a little bit less, at least not in America. This is observed in Australia, Switzerland, France, and Germany. Okay. There might be a little less volume in gold and just in markets in general on Monday. And then on Wednesday, which you'll see me, but hopefully, you'll see me, U.S. Consumer price, right? We have the CPI data coming out. That is a key mover in gold. And then you have your core CPI coming out. And then obviously next week, I will tell you all the economic data that's coming out. But watch out for these, okay? Because this is what's going to drive gold prices in the interim. I promise you that gold tends to react around these times of these reports being, brought to the light. So with that being said, I appreciate everybody so much for showing up, spending a few minutes with me today. Your golden guy, Drew Wolfer, as your kind of commodity compass inside of the precious metals market. I will look forward to seeing you next week. Next Wednesday, every Wednesday at 12:30 p.m. Eastern Standard Time for the Golden Nugget. Have a wonderful day, everybody.